Hi everybody, this is Sindil Babu from Restrict Traders and welcome back. So today we are going into an interesting video. So a pre-open session from NSE. So this is actually a mystery for a lot of traders. How the pre-open trades are executed and why are we having this gap up, gap downs in our market. So every trader, retail traders particularly, used to wonder how these trades are getting executed and can we participate in it, or who is manipulating in it. Some people used to wonder, and some people even used to curse like, no, these are like manipulations. Some people are always manipulating this market and making a bigger gap up and gap downs every day. So we cannot trust this likewise. So actually, according to me, these are just some calculation methods alone. So if you take and search in Google about what is this pre-open session, there will be a huge theoretical thing in NSE websites also, and in many other websites there are huge theory. But actually there is no particular website, I think, which will give a clarity and a very clear a live example of how these pre-open trades are really getting executed. So today I am just going to limit my theoretical explanation to a very much lower time and make it into a practical explanation with how the trades are really getting executed into a very elaborate manner. So I hope you will be liking the videos, and let's straight away go into the video now. Okay, now this is the a theoretical thing, just as a single page, that's all. So the timing, it is almost known to everybody. Market opens at 9 a.m. and 9:15. This is the pre-open timing of the session. Okay, and there is a two different times actually. One is order collection period. The order collection period is where you place orders and you can modify or you can cancel. So this is happening exactly from 9 to 9:08. So 8 minutes of the pre-open is just for order collection. The system will be getting all the orders from you and me and from all the FAs and the As, anything. Any participant in the market can order. And all the orders will be collected and it will be like settled. And there are settle mechanisms that are like different types. So they will call it eligible orders and residual orders and equilibrium price. So like there is, as I said, if you want to go into theoretical thing, how it is happening, you can just check in the Google and even NSE websites. So theoretical words and the terms are there. So I'm not going to touch again the theoretical things. I'm just going to be very practical in this video. Right. After the 8 minutes, what happened? It is called the price discovery. So after the pre-open time, actually 9:08, the price is really discovered. The prices will be matched and the orders will be starting to executed from 9:08 to 9:12. This is the time where the orders will be actually executed. So the pre-open, which are the orders which are getting matched according to the equilibrium price, and the residual orders will be carried for the rest of the time. The orders which are going to be executed will be happening from 9:08 to 9:12. And after 9:12, it is called the buffer time. So in the time from 9:08 to 9:15, actually you cannot place order or modify or cancel anything. After the normal market time, it actually normal market opens at 9:15. So like this is the theoretical thing. Now we will go into the practical thing. Okay, now there are some rules for execution of orders in the pre-open session. Okay, now these are the rules. Like system actually will be getting orders according to the time zone. Okay, the system will collect the orders in first in first out method, but not execute it. Okay, you have to remember all the trades will be executed only after 9.08 minutes, but the system will collect the order according to more or less like first in first out only. Okay, in this first in first out method, there is these are the rules. Like the eligible limit orders are matched with eligible limit orders. Okay, so eligible buyer, then the eligible seller. Okay, whoever comes first. So if the buyer comes first, he will be the eligible buyer, then the eligible seller. So the seller will be matched with the best buyer. Okay, and balance eligible limit orders will be matched with the market orders, and market orders will be matched with the market orders. That's all. So this is the first rule: eligible buyer, then eligible seller in limit orders. Balance of the limit orders will be taken with matched with the market orders, and finally the market orders will be matched with the market order. And the balance of the unmatched orders, it could be limit orders or even the market orders. If at all any balance of orders, that will be pending to and taken to the normal market to 9:15. Okay. So now in this sheet you can actually check. I have taken some consideration, assumption values for Nifty and some stocks. There is actually Nifty has 50 components, and this in this video I have assumed that Nifty has 5 components, and those 5 components are Reliance, Infosys, SBI, Tata Steel and Maruti. So these are the 5 stocks which I am assuming that the 5 components of Nifty, and I have given some weightage for them. So you can check what is the weighted average method, how the stocks are calculated in the Nifty components. So those theoretical things are available as in the Google. So here I have given 35% weightage to Nifty for Reliance, and Infi I have given 25% Reliance, SBI I have given 20, and Tata Steel 10, Maruti 10. So all the 5 stocks has been like in the order of their weightage. So Reliance as usual I have given the highest weightage to Nifty. So and I am assuming that Nifty's current value is 15,000. So and I have given some values for the stocks also. So Reliance 2000, Infi 1500, State Bank of India 500, Tata Steel 1000 and Maruti 5000. So these are the assumed values for the current market price. And so I have given the next some columns like change in percentage, change in rupees for each and every stock, and for Nifty also the change in percentage and points are given. So when I change the LTP, that is the last traded price, so I have given clear formulas for all the percentage terms and rupees, and for the Nifty also I have given a formula according to the weightage of the stock. So if the LTP of the stock changes, automatically the stock will give the change in Nifty also according to the weightage of the stock. Okay, so the formulas have been already built in. So when we explain the price movements, you will see automatically when I change the LTP, these values of the Nifty will also change accordingly. Right, now this column, this particular column is what we call the market depth. So these are available in your broking app what you are using. So there is called a market depth. So when you click on the depth of a particular stock, you will see so the best buyer rate and sell rate, and the buyer quantity, sell quantity, and the number of orders and total quantity for each and every stock. So this is the column like I have given for it. So now we will input some values and see how Nifty is getting changed according to the weightage of the stocks. Okay, now we will add values to Reliance first. So this is the first order I am entering. So there is a buyer in Reliance. There is a first order that at 10 shares of Reliance, someone is asking at 2,200. Okay, the spot price is 2,000, but 10 shares are placed at 2,200. So this is the first order and it is placed. And now comes the second rate now the seller comes. There is a one order at just one quantity of share at 1,900. He is placing an order one quantity only at 1,900 at a lower price. Now actually the system has got 2 orders. Now it has to combine these orders and execute it. Okay, but real execution starts at 9/8 only. So these are collection of orders. As per collection, now the pre-open will be altered, right? So what happens now? The buyer order is 2,200, there is a 1,900. Now what will happen? One quantity of seller. So he is the best buyer because he has bid with the highest rate, and he is the best first order. So 2,200. Now seller is quoting a lower price only, but the system will say like, why do you want to sell at a lower price when there is a buyer available at higher price? So this order will be matched, this quantity, this both will be matched with 2,200. So one quantity of Reliance will be getting sold at 2,200, and this buyer one will be executed and 9 will be remaining. So the system will take the LTP at 2,200. Now you can see I am just entering 2200. So exactly the next second the change it, formula changes. So Reliance is up 10%, stock is up 200 point, and for 35% weightage it is pushing up Nifty by 3.5% and Nifty is up 525 points from the spot price. Okay, and remember these are pre-open rates, not executed rates. Execution of trades happens only after 9/8. Okay, this is the first order which you have got. Now the same example we are going for NIFTY. So now there is a seller coming at NIFTY. There is a first order with like 100 quantity. Someone is wants to sell 100 quantity of Infosys share at 1350. Okay, 1350 he wants to sell. Now there is a buyer who wants to just buy 10 shares of Reliance at 1500. He is quoting at the previous rate. Okay, now system will take him this rate as the best seller because he has the lowest rate with the highest number of quantity. Now when you match this, what will say? The buyer has come second. So system will say, why do you want to buy Infosys at a higher price? Because it is available at 1350 with a higher quantity. So the system will match this 10 quantity shares with the 1350. So this buyer will be eligible to get 10 shares of Infosys at 1350 itself. So this guy will be selling 10 shares, remaining 90 will be pending order. Now the LTP will change into 1350. Now you can see 10% of negative change in the stock, 150 point down. Now according to 25% of change, Nifty from 3.5% up, it is down to 1%. That is from 520 point, it is down to 150 point because Reliance is pulling up Nifty by 525 points and Infosys is pulling down Nifty by like 375 points. So now you can see how the pre-open rates are getting manipulated. Okay, this is again pre-open rates, and in pre-open actually thousands of orders are placed. Okay, now we have got an example of just one order, one buy order, sell order in each stock. Okay, now we have to go for multiple orders. So now random trades are taken. So now another order is placed, like another buyer comes in with 1000 shares of Reliance. He is asking at 2050. Now another seller who comes out with that like the same 1900. Okay, but he comes out with 2000 quantity. Now what becomes 2001 and this becomes 2. Okay, now you can see now the sellers are getting increasing now. Okay, there is 2 orders, one is 1 quantity, another is 2000 quantity at 1900. Now the total buyers are just 1010 alone. Total buyers, their total buyers are unmatchable with the total sellers. Now system will take this as the best seller rate. Now sellers are getting higher because sellers are dominating the buyers now. So the system will change and the pre-open will be changing instantly, like all these 1010 quantity will be actually bought at 1900 because he is the best seller now. So at 1900, 1010 quantity will be bought from these 2 quantity. So first in first out method, the 1 quantity will be sold as the first person, and from the rest 1009 will be bought from this 2000 quantity. So the LTP will be changing now to 1900 now. So what happens now? Stock is down 5%, and see Nifty is down 4.25%, down 637 points. Now in case of Infosys, like huge chunk of buyers are coming in. There is 10 buyers are coming at the same price, like they want nearly 1000, like we'll take an example of 1500 shares. Okay, around they want stock price at 1525. Okay, now actually there is a change. So who is the best buyer now? Best buyer is always the person who comes out with the higher rate. So now what will happen? This will be changing like this. Yes, So the 1525 is the best buyer. He will be going up and 1500 will be coming down because he is the best buyer now. He is pushed down in the race of buying. Now selling, there is no change. So now what will happen? Earlier the price was 1350 because he was the lowest seller. Now the buyers are dominating. So automatically now buyer's price will be the LTP. Now at 1525, this 100 quantity will be exactly sold at 1525. So this guy will not get his shares sold at 1350. Instead, his shares will be sold at 1525. So automatically now the stock moves up to LTP is moved down to 1525. Now you can see now Infosys is actually up 1.65%, and now Nifty is just down 200 points. So now you can see how the pre-open rates are changing every second. So in this kind of math, for every second in all the 50 stocks, now you assume to 50 stocks, each and every second there is huge thousands, even sometimes lakhs of orders are getting in system into all these 50 stocks. All these stocks are actually in the pre-open are getting collected, and according to the first in first out and according to the best buyer and best seller rate, eligible trades are getting executed. Now I am like talking about the limit trades only. So once the limit trades will be settled, then someone, in this case, if you are like seeing someone is putting some Infosys shares, 500 shares at market rate, what will happen? The system will look whether 500 is available or not. So buyer is there at 1500, 100 is gone, 1410 is pending. So now the market order will be placed with the best buyer. So again 1520 will be the LTP, not lower than that, because the market rate is just lesser, the sellers is lesser than the buyers. So this rates will be holding. So the pending quantity of 1410 will be alone moving to the normal market after 9:15. So like in this, you have to update all these stocks. Now I'll actually update the rates in all the other stocks. Okay, now we'll go into some real big numbers. Say some huge chunk of orders at 87 orders are placed around roughly 10,087 quantity at 2045 Reliance, and at the same time 2045.5 seller rate comes around like 7,853 quantity around like 67 orders. Right, this is the summary. Now we'll see system has got multiple orders at various rates. Now the total now buyers like comes around 11097, total sellers comes around 14853. But if you see this, now if you see the total number of buyers and sellers are high, okay, but according to the equilibrium price, this is the rate with like the most eligible buyer and the most eligible seller. So system now will calculate like, now the time, if it is around roughly around 97 or 98 something, system will find this price as the buyer and seller as the equilibrium price. So what will happen is that all the buyers, these rate will be average at 2045 because he has the best buyer rate and he has the highest number of buyer quantity. So what will happen? This quantity of 5000 plus 2001, 7001 will be matched with this quantity. So this 7000 will be getting reduced like 11,500 minus 7001. Yes. So this 4,996 quantity will be executed at the rate of 2045, and this quantity also will be getting vanished. So what will happen is these buyers will be getting now you can see these buyers are gone because they are executed at 2045, and these sellers will be also gone now. And now you can see those sellers and buyers are matched at 2045, and this number of quantity will also get reduced to 4096. Okay, and these orders will also get, like there were 7 orders previously, so 80 number of orders will get reduced to 80. So those 7,000 quantity is sold off at 2045 and the LTP will be 2045. Now this will be the rate of change. So the rates which quoted below 2045 will be coming, will be accumulated as the pending quantity. Now if the time is at 9:08 now, like 2044.5, 2043.8 and 2043.75, 2043, all the rates will be getting accumulated downside, and the seller rate will be sellers who quoted above 2045 after these particular trades are executed. Okay, the rates which were executed are the sellers who quoted the price below 2045. Now the price the sellers who quoted above 2045 will be pending quantity for a normal market, like this 2051 likewise. So the buyers will be at descending order and the sellers will be at ascending order. So this is how the pre-open rates will be adjusted after 9/8. So now you can see all the other stocks. Now I have given the clear example of how the pre-open gets executed. So now in Reliance we actually went for the individual order placed and finally saw at what happens at 9/8, how the orders are accumulated, collected, then the equilibrium price is set, and according to the equilibrium price all the buyers and sellers are getting triggered. Okay, so after the 9/8 the pre-open rate is settled. So the best buyer rate and the below rates will be listed, and the best seller rate and the above rates will be listed accordingly. So now you can see how SBI, like our tick size is 0.05. So according to the tick size and the prices, the orders available in the system, so you can see. So now I have adjusted Infosys's last traded price at the 9/8 exactly, after all that orders are accumulated and adjusted according to the equilibrium price. So now Infosys opening at 1463, that is 2.5% lower, and SBI is opening at 505, 1% higher, and Tata Steel is opening 992, 0.8% lower, Maruti 5150, 3% higher. So now you can see the quantity, buyer quantity, seller quantity, all the thing I have adjusted. So now according to it, Nifty finally in the pre-open we saw Nifty oscillating between 500 point plus, 300 point negative, then 600 point positive. Those are like crazily numbers were going on, but exactly at 9/8 what is happening? The percentage of Nifty is just 0.59, that is 88.63 is just Nifty is up, and Nifty is up at 15,088.63. Okay, so this is how the pre-open rates are getting traded. Okay, so still I think I have explained up to most as possible I can. So with the data which I have seen in many years how these pre-open is trading. So this is the theoretical and the practical thing what we have seen. So please for further understanding you have to sit and watch how these pre-open trades are getting really executed. So at 9 o'clock exactly, sit in the front of the system, open the market depth of particular stocks and see how the orders are being placed. And for still more clarity, you can go for the stocks which are like IPO listing date. During the IPO listing date, these pre-opens are traded for 45 minutes. Any stock which is getting listed on the IPO date, after IPO, they will be having a 45 minutes pre-open. So you will have a much more clarity in those particular time. So 45 minutes the orders will be completely collected. So you can see how the buyers are coming and the sellers are coming, and equilibrium price will be found by the system and it will match the price. So after the 45 minutes there will be some collection time, and the buffer time is over, and the stock will be automatically going into normal market after 10 o'clock. So this is how pre-open works for stock on the listing day. And now you can apply the same math to it. So I hope everybody is able to find this video a very useful thing. And please remember, all the pre-open rates, the Nifty adjustments we are seeing from 9 to 9.7 are just assumption of the trader executed order, and nothing is traded. All the trades will be executed only after 9.8 when the equilibrium price is found in the particular stock. So if you take Nifty, after the 50 stocks, LTP is found at 9.8. According to the weightage, Nifty will be exactly altered at 9.8. So this is how the pre-open works. So thank you all for watching the video. Hope you all enjoyed the videos. Please subscribe and share this video as much as possible, so every trader and investor can get a glimpse of what is happening in the pre-open. And please follow us in Twitter and Telegram also. So the links of the Twitter ID and Telegram ID are given in the description below the video. So please watch and share and subscribe to our channel. So thank you, and I will come back with another video as soon as possible. So thank you all.